How do the top traders stay funded while the rest blow the bag? What are all your favorite traders doing different that allows them to keep getting consistent payouts? I'm gonna break that down for you. So I've passed many challenges myself at multiple firms. I've gotten multiple payouts. I've taught many traders at Precision Markets to do the same. A lot of these traders today actually trade full time for a living. Many of them still at prop firms. And today I run my own firm, Momentum Funding. So I'm surrounded by traders all day, whether I'm on Precision Markets or at Momentum Funding. These traders consistently talk to me. To this day, I still guide them in any way I can, and we talk all the time from trader to trader. There's a lot of things that consistent traders have in common, but there's three that really stand out to me that I find to be the pillars to success, and those are the three I want to break down for you today. The best traders I know all have a trade journal, and they all have a trade plan they follow. The main thing with trading is you got to record your data. If you have your data, you can go look at it and you'll know what to change. Think of it this way: following your data is running trading like a business, because it is a business. So you've all heard the saying, work smart, not hard. That is probably one of the dumbest things you'll ever say in trading, because you won't know how to work smart until you've worked hard and you've made many mistakes. Basically, you got to reverse engineer what doesn't work. I tried this, it doesn't work. I tried this, it works. Okay, I'm gonna do more of this and less of this. That's truly what trading is. So your trade plan should have a way of determining directional bias. For me, that's ranges and moving averages. For some people, it's market structure. However you want to do it, you got to determine your directional bias. The best way I found is figure out your fundamental direction, figure out your technical direction, and when the two go in the same direction, that is your highest probability trade. Once you have your directional bias figured out, you gotta know what you wanna see to get into a trade. For example, I want price to pull back here on the fib, I want it to react off the MA, and when I see this candle pattern, I'm gonna execute the trade and I'm gonna target this specific area. That should all be outlined in your trade plan. If there's one thing I can recommend with the trade plan, keep it nice and short and simple. I've seen some people out there that have a trade plan that's this thick, and to this day, they don't even know what their own plan says. My plan's on one page. It's very simple. I don't throw a lot of stuff in, because in the real moment, you got to make a decision based on what your trade plan says, and the rules should be simple enough to follow. There's no second guessing yourself. And the next part of this is journaling. How did you get in the trade? Why did you get in the trade? Was it a part of the trade plan? What was the outcome of the trade? And what I like to do is I go look at these every Friday or every Sunday, end of the week, and I do a review and be like, hey, this, and this followed the trade plan. This one was borderline executed because of FOMO or whatever, or this one I broke even too soon, this one I targeted wrong. And the more of this data you gather, the more you can change your rules to suit your own trade plan based on your trading style. So for me today, I have a pretty good idea of how I read price action, because I only trade gold. If price is impulsing, for example, I'm gonna break even pretty quick. If price is kind of consolidating and barely moving slowly and it's kind of like zigzagging, but it's got deep mitigations, I know from experience I'm gonna leave that stop loss open because it's doing deep mitigations. And this is all written in my trade plan that I've gotten over years of data. So we've covered the first part, which is your trade plan and journaling. The second part is risk management. It's arguably more important than the first. However, it's all equally important, and you gotta get all the pieces aligned if you wanna get profitable. What is risk management? It's not over trading, it's not over leveraging, and it's really having that patience to just sit back and waiting for your trade to arrive. Now, the biggest problem I see with traders is they blow their accounts, and believe it or not, this is a statistics from prop firms. Most traders don't even hit their overall drawdown, they hit their daily drawdown, meaning there's a lack of discipline and a lack of risk management. To revisit what I was talking about in journaling and trade plan section, where depending on what price action's doing, if we're impulsing or if we're moving in zigzags, I know how to manage my trade. I know when I can break even really quick. I know when to leave my stops open. I also know that, hey, this trade needs a little breathing room, but I don't want to break even completely, so maybe I'm going to reduce the stop loss in half so that if I lose half the risk. So today I would say 60-70% of my trades don't even hit full stop loss. If I see price action come against me and I don't like what I'm seeing and I don't think that it's going to work out, I rarely let it hit the full stop loss. Sometimes I will if I think it needs breathing room, whereas other times I'll be like, hey, there's like an 80-90% chance this trade's not going to work out. Rather than taking the full full loss and losing, let's say, an 80 pip stop, maybe I'll close it at a 50 pip loss and save myself 30 pips. That's risk management. The idea of risk management is to protect your account long enough so that when price action is good and your edge works again, you have capital to make money. You still have your funded account to make money. Because if you don't have an account to trade because you blew it or you overtraded, it means your risk management lacks. You should be able to lose a whole month on your prop account and not actually lose the account. That's how good your risk management needs to be. The third part of this, and this is what ties it all together, is discipline. Discipline ties in with patience, but what exactly is discipline look like in trading? It's doing what you know you're supposed to do, even if your emotions are telling you chase that trade. Discipline says, no, you don't have your setup, you have to wait. Even if that means you missed that setup, you missed the next setup. Hey, I just sat the market out for 8 days. When I went and revisited the price action, I actually only missed one trade that fit my trade plan. And when I looked at it, I was like, I don't actually feel bad because all my capital was protected. So when the next couple trades arrived, I was able to take bigger lots because I didn't have any losses to cover. So the easiest way to get more disciplined in trading. Now this is a hard one, but I'm going to give you a few tips for this. You've probably all seen that video of the US Navy SEAL commander that talked about how he trained Navy SEALs to get disciplined. And he said, if you want to change the world, you want to start off by making your bed every morning. What does that mean? It means that you took pride and you got the first task done. Hey, I didn't feel like making my bed, but I still did. Now you went to the kitchen, you had a meal, you cleaned up after yourself. Hey, I didn't feel like cleaning up right now, but I did it anyway. Hey, I don't feel like working out today, but you went to the gym anyway. You didn't have a good workout, but guess what? You went. I'll be honest with you guys, I go to the gym a lot, and I'd say over half my workout sessions, I go there and I'm like, I don't feel like being here. But when I'm done the workout, I'm like, I'm so happy I went. I feel better. And I know in my mind, because I'm more disciplined in other areas of my life, that trading discipline becomes easier because it's actually who I am now. I focus on discipline in every area of my life. So if I can follow the gym, if I can follow my diet, if I can do stuff around the house that I don't feel like doing on days I'm not having a good day, but I still do it, I know I'm more likely to do the same thing in trading. So rather than just being like, hey, my discipline's not that good in trading, what can I do? Focus on discipline in your whole life. Anything that you do, you might not work out, you might not do this, but maybe you need discipline in your job. Maybe you need discipline in how clean your house needs to be. Work on all the little areas of discipline in your life, and I promise you, just by working on discipline in other areas of your life, it'll make your trading discipline better. Because discipline is not just something you pick up overnight, it's definitely creating a habit and becoming that person. If you can become that disciplined person in one area of your life, you'll be disciplined anywhere else. Now you're probably wondering, why are you still struggling? If you're still watching this video at this point, I assume something I said resonated with you. And the truth is, guys, I went through every one of these issues myself. I blew many accounts. I've had payouts denied. I've owned many cash accounts. I've overtraded. I've overleveraged. I'm not going to sit here and be like, hey, I was this perfect trader. No, I became a better trader by managing my own expectations. And how did I manage my own expectations? I made a lot of mistakes, and I went back and I'm just like, hey, all of this didn't work. And if I want different results, I got to do different things. You cannot repeat the same thing over and over and over again and expect different results. So that comes with the 3 pillars I just gave you guys. Trade journal and trade plan, those two go together. To me, they're one. One doesn't work without the other. Risk management, that's not even, like, it's not optional. None of these things are optional. It's, you have to do it. If one of them's missing, you won't succeed. And the third one is discipline. And the biggest part of discipline is doing the right thing at the right time, but also having the patience to do nothing. Sometimes the best move in the market for the day is no move. And if you can learn that, and you can learn the patience, and you can learn ways to reduce your losses and lose less and stop over leveraging and stop over trading, you're going to give your account a chance to survive. And if your account can survive the bad price action, I promise you that good price action is going to arrive and you will slowly start making progress. Now, it's not going to look like this. It's probably going to look very up and down. Eventually you have a good run, very up and down. Eventually you have a good run, but you can't go down too far and blow your account. And that's where most traders I know struggle. When the price action arrives, they either blew their challenge, they blew their personal, and there's no capital left. And what happens? You don't just lose your capital, you lose your mental capital. You no longer believe in yourself. And when you no longer believe in yourself, this makes trading way harder. One of the best tips I've ever gotten, this is from a good friend of mine who's actually a fund manager now. He said to me, you have to see the vision and you have to believe you can do it before you even know the how. He's like, the how will come from seeing the vision, believing you can do it. But it's one thing to see it, it's another to believe it. And the third most important thing is you got to take the action and actually do it.